in the excise duty, we propose to increase the specific excise duty on any other undernatured spirits of 85% alcohol strength by volumes of less than 80% from Uganda shillings 1,700 per litre to Uganda shillings 3,500 per litre. Here what we are talking about John Walker, Jack Daniels, Jameson, Singleton, you can Black Label, you can mention others and other beers. So we want to increase the tax and to meet mainly three objectives. Objective one is that most of these products are imported, and there are those which are locally. They have substitutes which are locally manufactured. So we want to favor the consumption of locally produced products of this nature. And number two is that those who consume these products are high-end individuals, those who can afford. In other words, these products are not price elastic, meaning that a small increase in their price, may not affect their consumption, because those who consume them are able to can still afford even when this tax is changed. And three, we want to raise revenue. We have a target of growing our tax to GDP ratio to 20% in the medium term and 25% in the long term. So to achieve this aspiration, we must tax some of these consumptive items which are not essential. We propose to introduce a withholding tax of 6% on public entertainers, you people. When you are doing your what? Your concerts, your what? This is for musicians. When the Baram is doing his evivuro, so on his income, we want to take 6% of it because he's earning income. When you are doing comedy, same. When you are doing comedy, when I was young, I used to go to Theatre Bonita. Yes, I would pay, but there would be no tax charge. Now we are saying, if you are Theatre Bonita, you are charging for comedy. Then we deduct 6% withholding from you. Then we propose to reform the taxation of income earned by individuals from foreign jurisdictions by equalizing the tax treatment of foreign income to that of local income. Then 11, we propose implementation of the Gazette of rental tax rates. This is what we have proposed under the Income Tax Amendment Act. Now, in the excise duty, we propose to increase excise duty on diesel and petrol by Uganda shillings 200 per litre. Apparently, petrol is paying excise duty of 1,550. We propose to increase it to 1,750. Diesel is paying 1,230. We propose to increase it to 1,430. and the objective here is to raise revenue. Then, under income tax, under excise, we propose to increase excise duty at first registration on motorcycles from 200,000 to 500,000. Here the objective is to raise revenue. Number 4, we propose to extend excise duty to apply to all single-use plastics and increase the rate from 2.5% or $70 per ton, whichever is higher, to 25% or $1,500 per ton, whichever is higher. 5, we propose to introduce excise duty on paints, varnishes, and lacquers. 6, we propose to review the environmental levy regime on motor vehicles. 8, we propose to apply excise duty on all single-use plastics and increase the rates. I think this one is related to what I mentioned. 9, we propose to increase the excise duty on cement from 500 to 1,000 per 50 kilograms. 10, we propose to increase excise duty rate on sugar from 100 per kilogram to 300 per kilogram. And 11, we propose to introduce excise duty on cooking fat and fatty acids at Uganda shillings 500 per kilogram or per liter. And 12, we propose to increase excise duty on cooking oil from 200 to 400 per liter. And under the Traffic and Road Safety Act, we propose to reduce the age of acceptable cars in Uganda from 15 years to 13 years from the date of manufacture. And we propose to introduce a graduated scale of environmental levy on imported used motor vehicles. Under the gaming law, we are proposing to increase the tax on betting from 20% to 30%. That's all. Thank you very much. Bills are 8 in number. The main ones are the income tax amendment bill, the VAT amendment bill, the tax procedures code bill, the stamp duty, among others. Now, you are asking what is contained in the income tax amendment bill. The income tax amendment bill contains the following. 1, we are proposing to introduce a 5% withholding tax rate on interest paid by a resident company to a non-resident lender other than the exempt person. 2, we are proposing to review the current threshold of pay-as-you-earn and personal income tax. This is where the threshold is changing from 235 to 335. We are proposing to provide an option for taxpayers to pay rental income tax on a monthly basis. The rental income has been paid quarterly, every 3 months. That's what the law has been providing for. But now we are proposing to amend. This is an administrative amendment to enable the rental the rental income earners pay rental tax on a monthly basis. We are proposing to introduce a withholding tax of 10% on commissions paid to data and voice bundle distribution agents. We propose to introduce a 15% withholding tax on gaming. 7, we propose to introduce an alternative minimum tax of 0.5% for businesses which carry forward losses beyond 7 consecutive years. In other words, you consecutively report tax losses forever. You want to report losses year in, year out. We are saying if you get to 7 years, you are still in operation. Perhaps you are making business profit, but you are reporting tax losses year in, year out. We now tax you based on your turnover. We are proposing to introduce a 6% final withholding tax on non-business assets. 9, we propose to introduce a withholding tax of 6% on public entertainers. 10, under the VAT, we propose to increase the VAT threshold from Uganda shillings 150 million to Uganda shillings 250 million. I think I need to give an explanation here because I had some people misinterpreting it. This is not an increment in tax. Instead, it is favoring the small people, the small businessmen and women. Because apparently, if you have a turnover of 150 million per annum, you are required to account for VAT. You are not VAT exempt. Now, we are saying this is tedious because the business is small. You don't have proper books of accounts, etc., etc. So we are saying instead of disturbing these people, even the cost of administration here becomes higher. So we are saying let's relieve small business. They are called what? The small. No. These are not necessarily SMEs. These are they are sole proprietors mainly. So let's relieve these sole proprietors from the tedious process of accounting for VAT to allow you to grow to a certain capacity, such that if you reach a turnover of 250 million per year, there you can account for VAT. But those who are below 250 million can now be exempted from accounting for VAT. So it's a good measure. It's a measure that favors the small proprietors or the sole traders in this economy. Is to go to Arusha and seek for a stay of application. There is what we call stay of application. Do you know what it means? The international trade taxes are not discussed here. We harmonize among the East African market partner states. So when we decide that the tax rate, for example, imported sugar will be this, will be that, imported tiles will be this, I'm just giving examples. So that should be the tax charge across the partner states. But what we do, sometimes we go back and say, yes, we agree, but as Uganda, we want stay of application on the following items. So that if the rate is, say, 60%, for us, they allow us to charge 80 or 100%. until such a point when we are comfortable. So that is what the external tariff is seeking. So we have to achieve a balance. What do you want to achieve as a country? Do you want a prosperous private sector? The answer is yes. And what does the private sector need? The private sector needs an enabling environment for them to prosper. How does the environment, the stable and enabling environment look like? It's an environment where the tax regime is favorable. It's an environment where the interest rates are not high. It is an environment where the cost of capital, where the cost of labor is affordable. It is an environment where the trade facilitators, where the government is able to give the public facilities to enable the private sector flourish. There we look at things like electricity, we look at things like the infrastructure, the roads, the water, etc. So it is basically capital. The cost of capital must be affordable and available. The trade facilitation interventions in terms of the electricity, the transport, must be affordable. And also the cost of labor. Labor must be available and affordable. And the tax regime should not stifle. And that is what I emphasized, that whereas we are introducing some tax measures, we are also cognizant of the fact that we have an obligation as a government to support our private sector flourish. And that is why we are saying we don't want to tax at the start. We don't want a business to start today, someone comes with an innovation today, and tomorrow we are bringing a tax bill. We don't want to tax people who are in production. You are producing your milk, we are finding you at your farm gate and putting a tax. No, we don't want that. Let's allow you sell your milk, then we will tax you when your income, when your disposable income increases. Where you will dispose the income is where we shall meet you. So we are very sensitive about that. We are saying if you are an investor coming to invest in Uganda, we should attract you. How? Give you favorable land, give you free land to establish your factory, give you exemptions on, for example, on machinery and other things, and also allow you to repatriate your profit. Come here, produce from here, employ our people, export your goods so that you help us in the BOP and also in the import substitution. Then when you make your money, you are free to move your capital wherever you want it. So all these are favorable conditions we have put in place to enable our private sector to flourish.